So as I mentioned, monetary policy unchanged at 9.5%. We're looking at an inflation number of 9.2% for December and January. We know that they have a target band similar to what we see in South Africa of between 3 and 6%. Do you think that it was wise to keep rates unchanged at this level, despite the fact that it is above the target?
Yes, I think it was the correct decision. In fact, in January, the inflation rate dropped a little bit to, I think, 8.8% year on year. But I think firstly, the central bank still expects that inflation will drop to within that upper level, below 6% by the second half of this year. But I think the dominant influence on that decision was really the growth outlook for the global economy. In January, the IMF dramatically revised downward the outlook for the global economy, for China, an important trading partner for sub-Saharan Africa, for South Africa, and of course a number of the other emerging markets as well. So I think growth concerns was probably, in my estimation, uppermost in their minds. Thirdly, the commodity complex has also shown increased volatility. Oil prices are slightly lower. If you look at the CRB index, it's also off its former highs. So commodity prices also, I would think, would played an important part in that decision.
Let's also just touch on the exports, and we know that Botswana is heavily reliant on diamond exports, still accounting for around 80% of the total exports that we see. With regards to the actual prices, we know that polished diamond prices have actually dropped by 7.6% since the all-time high that was reached mid last year. The point is that we're still sitting at levels which are relatively buoyant. Is there still an underlying fear when it comes to the reliance on diamonds in Botswana? Do you think the government is doing enough to ensure that they diversify away from this space should there be another economic shock globally?
I think the Botswana government is doing all it can. One of the things it's doing is having to combat the so-called Dutch disease is by having to look at the real effective exchange rate to make sure that you don't get an overvalued exchange rate. It's extremely difficult, of course, to diversify economy. They're trying to diversify the economy into the services sector, and it is, I think, partly successful. Going back to diamond prices, yes, diamond prices are off their sort of peaks currently from the previous all-time high reached in July last year. And that peak, in fact, was even higher than the July 2008 peak. And during 2008, we saw the commodity complex really asserting itself dramatically. But yet, diamond prices, as I said last year, also again peaked at a higher level than the previous peak. I think the dynamics for demand for diamonds have changed a little bit. It used to be, diamond prices used to be quite strongly correlated to United States consumer confidence. I think that relationship has weakened, and what has sort of taken up slack there, if you want, is rising demand from emerging markets, especially China and India. And the link could be also with the rising gold price. So the demand for jewelry, diamonds and gold could possibly go hand in hand. But the increased affluence in those markets are important.
Yeah, and I'd like to talk on government revenue. That is set to increase by almost 13%. Sucker receipts being one of the big reasons. And I'd really like to highlight, especially to our viewers, that we could actually see total government debt is going to fall to 23.3% of GDP in 2012-2013 from 24%. These numbers are amazing when you see what's happening in the developed world, but obviously an economy that when you see what is happening from a debt to GDP level, very well balanced, and revenue also increasing.
Yeah, I think the government is taking a very conservative stance, and I think that's an important plus for them. In the budget, they estimated that revenue and grants would rise, but they would strive to keep expenditure flat. So they're projecting a small surplus, a budget surplus in the coming year. What is, I think, of importance there is the government's attempt to contain the wage bill. Now, the wage bill is disproportionately large in even a sub-Saharan African context. We saw, despite seeing civil servants striking last year, and with increasing wage demands, the government intends to reduce the wage bill, I think, by about 5% every year over the next 3 years. And that is really to contain ultimately excessive borrowing by the government. And I think the Conservative stance is important because nobody really knows what's going to happen to diamond prices. Also, the important thing is SACA receipts. Now, that's a difficult aspect to come to terms with. And what we'll see next week when South Africa announces its budget, there's an important entry in the budget where it will show the expectations of SACA revenue. That is the total SACA revenue pool. And SACA revenue has been extremely volatile, and in Botswana's budget, it makes up about the expectation about a third of budget revenue. If growth is buoyant and imports is very strong into the SACA region, SACA receipts will rise again. If you look at last year's estimates, they were way above previous estimates or previous actuals in 2008 and 2009. So there may be another windfall, but it shouldn't be chalked up as to expect it permanently.